The price rose for several days during a medium-long-term downtrend. Is it a short-term rebound or a reversal of the trend? If you have learned Daryl Guppy's Countback line, this problem will be easy to solve. Hello everyone, I'm Lisa. If you are the first time watching my video, you can subscribe my channel so that you can follow me to learn some technical trading skills every day. In the process of a wave of continuous decline, there was a candle with a long lower shadow. Then, price stopped lowering and rebounded for 4 consecutive days. Can we get in here if judged by common sense? Yes, can. But after buying, it fell for 3 days. Then came another 2 big young candles, breaking through the platform built in the early stage. Can we get in here if judged by common sense? Yes, can. But after entering this time, even worse, because there is another wave of sharp decline. So you get stuck deeply if you buy in. Finally, after a long time decline, there appeared 2 big young candles, and they are very strong. Can common sense work this time? Oh no, we cannot judge by the common sense anymore. Why? The previous 2 times failure made us hesitate, not dare to buy anymore. But when you hesitated, the price started to rise rapidly. Are you happy? No, because you didn't buy this time. So what's the reason? In fact, the common sense you think is wrong. Your inference is based on the trap set by the bankers. Because a method is easy to be used after it becomes well known, then how can we find the real resistance in the market? We need to combine with the Countback line to make the further judgment. Firstly, let's look at this demonstration. If a stock is falling all the way, then there appears the first candle not hitting a new low. It is not necessarily a young candle. In candle is also okay. As long as it doesn't hit a new low, we can mark this candle as 0. Also known as the trend change point. Then we count back 3 candles from 0. 1, 2, 3. What conditions should it meet? The 3 candles must meet the high price of candle 1 lower than the high price of candle 2. And the high price of candle 2 also need to lower than the high price of candle 3. These 3 candles can be continuous or discontinuous when the condition is met. If the price starts from the change point of 0 and continues to rise along the change of its trend, is it a reversal of the trend or a simple rebound? Here, we need to combine the third point to judge together. We can take the high price of 3 as the critical point of the trend. That is, you can draw a line based on the high price of candle 3. This line is the Guppy pressure line. As long as the price not breaks through this line, it is rebound only. But if it breaks through, it is a reversal of the trend. Then there will be a short-term rapid rise. Let's go back to check the counter. The Countback line is over here, the high price of candle 3. We can see there is no breakthrough. If you don't buy, you won't be stuck. Then, after falling down, this Countback line, 1, 2, 3, the real pressure line, not been breakthrough. So if you don't buy, you won't be stuck. Then how about this time, Countback 1, 2, 3? The real pressure line has been breakthrough, right? So we can get in. We can say once getting in, the price rises sharply. Are you happy? Yes. Trading stocks also can be so simple and happy. Okay, that's all for today's lesson. The Countback line, which can help us to judge whether it is rebound or reversal. Hope can help you. See you next time. Bye.